Hello kind people of YouTube and welcome back to another video. So, sorry today's upload is a bit late. I've had a very busy day. It is just about 10 PM in the evening here and I just got in. But I figured I promised you guys daily videos and I'm gonna try to keep them coming even when I am busy. So let's jump into the crypto news from the day. And the first thing we have to talk about is an actual proposed date for the upcoming Ethereum Constantinople hard fork. Ethereum core developers have proposed activating Constantinople, a planned system-wide upgrade that was called off earlier this week in late February. Also called a hard fork, Constantinople is now estimated by developers to go live sometime between February 26th and February 28th, with a block number to be determined at a future date. If you look up here, there has been an update to this article, and the block number has now been decided as 7,280,000. Previously, the update was supposed to happen at 7,080,000. But now this is scheduled to hit on February 27th. Keep in mind that it's impossible to predict when exactly a certain block will be reached, because the time it takes for any given block varies a bit. But if it goes by its typical average speed, this shall be hit on February 27th, maybe a day earlier or later, but not more. The proposal was made during a core developer phone call on Friday morning, and participants on the call included Ethereum creator Vitalik Buterin and other developers, including Hudson Jameson, Lane Rettig, Afri Schöden, Peter Cisalgli, I don't know how to pronounce that, I'm sorry, Martin Host-Swende, Danny Ryan, and Alexei Akunov, among others. The decision comes after smart contract audit firm Chain Security flagged on Tuesday a security vulnerability in one of 5 Ethereum improvement proposals set for inclusion in Constantinople relating to data storage costs on the blockchain. As a result, Constantinople, now set for activation next month, will not feature inclusion of the buggy EIP, which will be tested and refashioned for inclusion in the subsequent hard fork. I'm actually a bit surprised this is with what they're going with here, because if they're just going to exclude this part of the proposal, this part of the hard fork, it seems like they could move ahead with it in the coming days and wouldn't have to wait until the end of February. I'm slightly confused by this decision. Instead, Constantinople will be issued in 2 parts simultaneously on the main network. The first upgrade will include all 5 original EIPs, and the second upgrade will specifically remove EIP 1283. Well, I'm not a coder, but this seems like a very roundabout way to do this to me. I'm sure they have good reasons, it just seems odd to me. This strategy, first suggested by a guy whose name I can't pronounce during today's call, is meant to ensure that test networks and private networks that have already implemented the full Constantinople upgrade can easily implement a fix without rolling back any blocks. But to my knowledge, only one or two softwares have implemented the upgrade, and to my knowledge those had already rolled it back successfully. Maybe my information is just not up to date. My suggestion is to define 2 hard forks, Constantinople as it is currently, and the Constantinople fix-up, which just disables this feature. By having 2 forks, everyone who actually upgraded can have a second fork to actually downgrade, so to speak. The decision comes, this is literally what they set up. This is a repeat paragraph. Speaking to CoinDesk on Tuesday, Matthias Igli, COO of Chain Security, highlighted that the issue was likely not picked up by core developers when running tests on the software, given that the impact is rooted in smart contract development, not necessarily Ethereum virtual machine core development. A prompt decision to reactivate Constantinople sooner rather than later was needed, in part due to the prolonged activation of Ethereum's difficulty bomb, a piece of code embedded into the blockchain making block times increasingly longer over time. Meant to encourage transition to a new consensus algorithm known as proof of stake, a delay of the bomb was suggested in EIP 1234 due to insufficient research at present for a transition to POS. Once activated, Constantinople will include the proposal and delay the difficulty bomb for a period of 12 months. This is something they continuously have to do until they upgrade to the proof of stake system. The difficulty bomb is essentially implemented to force that upgrade sooner or later. So you essentially either have to switch over to proof of stake, or you have to continuously run upgrades that push the difficulty bomb, back further. Now there's not that much to say here, we just got the date now and everything else about the story was already known before. I do get the reasoning behind doing this in 2 forks now, pushing out Constantinople as itself and then a separate fork that that makes sure that certain buggy features are disabled. But that doesn't quite line up with the time frame and with the information that I had heard before, so I'm slightly confused by going this direction. This is more of an opinion piece, but I thought it was interesting to read nonetheless, and I do have some issues with it. Did Bitcoin Cash fail 500 days since the fork? It looks like it did. I agree mostly with the headline, but there's some stuff in this article that I feel is dishonest, so let's take a look. Nearly 17 months after the contentious fork that gave birth to Bitcoin Cash, it may be safe to say that the entire purpose of the fork may have been defeated, rendering Bitcoin Cash as little more than just another altcoin. An examination of the available 500 plus days worth of data on the Bitcoin Cash blockchain shows that despite the impassioned arguments and big promises made about its 8 megabyte block size, it has never come close to filling out this capacity. Data from Coinmetrics shows that Bitcoin Cash still remains far behind Bitcoin, not only in proportional terms but also in absolute terms. And of course it would always be behind it in absolute terms if it's behind it in proportional terms. As long as they mean proportional to Bitcoin, of course, I mean. As miners and consumers have overwhelmingly chosen to remain with Bitcoin. Notwithstanding a couple of brief spikes, the market has delivered its verdict over the course of 17 months. And this is just the block size on each network. Not the average block, the total daily blocks. It would seem that the Bitcoin Cash fork, which took place in the midst of a polarizing argument about whether or not to maintain Bitcoin's 1 megabyte block size, has turned out to be an exercise in futility. While the major idea behind Bitcoin Cash was purportedly to provide a faster and easier way for transactions to be made using a larger block size as a solution, the market has spoken in the intervening year and a half, and what it has to say is not good news for Bitcoin Cash. I don't agree with this line of argument, and you will see why after we read the next two paragraphs. The data shows that far from filling out or even getting anywhere close to its 8 megabyte block size, Bitcoin Cash has averaged a block size of merely 171 kilobytes since the hard fork. Bitcoin, by comparison, has averaged about 934 kilobytes of its 1 megabyte block capacity over the past month. Keep in mind here, this is an unfair comparison. They're comparing Bitcoin's last month to Bitcoin Cash since August 2017. If you want a fair comparison, you compare the same time frame. In other words, Bitcoin Cash is utilizing just about 2.1% of its block capacity and is only averaging about 18% of Bitcoin's block size, despite having forked with the express intention of building bigger blocks. Despite any protestations to the contrary, this clearly shows that there is significant lack of interest in Bitcoin Cash, as has been the case with Bitcoin forks in general. Once again, I'm not quite sure this is a fair characterization, and this isn't even my major... The website just goes all over the place. This isn't even my major issue with this article, but I don't think this is a very fair comparison here. Very few people expected Bitcoin Cash to become bigger than Bitcoin, but to say that there's a significant lack of interest when it is one of the biggest cryptocurrency projects on the market, with one of the largest market caps, and with a lot of exchanges offering it, with a lot of people working with it in various ways, I think is quite frankly dishonest. Okay, let's get to this last paragraph and then I'll get to my core point here. So far, there has only been a single day on record that has seen Bitcoin Cash block size utilization rise over. I think they mean over 50%. This took place on January 9, 2018, when Bitcoin Cash block sizes briefly hit 59% of the 8 megabyte capacity before rapidly reverting to mean. Even more tellingly from a market point of view, Bitcoin Cash has hardly fared any better in terms of investment, managing only about 3.6% of the market cap of its ancestor. Now, I will be the first to say that I don't think Bitcoin Cash is the most intriguing, most promising project in the crypto markets. If you've been watching my channel, you know I don't feel particularly positively about Bitcoin Cash or about any Bitcoin hard fork, let alone hard forks that were then created from Bitcoin Cash. I'm not a supporter, but I also always try to be fair in my assessments here and to call out unfair lines of argument when I see them. And this strikes me as a bit of an unfair hit piece. Because the entire point of the 8 megabyte block size, they are mischaracterizing everything here. The entire point of it is that 1 megabyte is frequently filled out. You don't want the block size to be filled out. So Bitcoin Cash not filling out its block size, is it working as it is intended to work? That is part of the reason for increasing the block size, because you don't want every block to have full size. You want blocks to be small and to have overhead. You want there to be overhead so the network doesn't get congested, so the network doesn't get filled up and slowed down. What we have seen with Bitcoin, where the block size is 1 megabyte maximum. When that maximum is reached, the network gets congested. Nothing can go through. The reason to increase that size is so that cannot happen. So this entire line of argument, and that is the only real argument that they're providing here. They briefly mention at the very end here that it only has 3.6% of Bitcoin market cap. Now, of course, the fairer comparison here would be to compare to the larger cryptocurrency markets, where it is still one of the biggest coins. But the core argument that this article is built around is that Bitcoin Cash doesn't use a big part on average of its block size capacity. That is Bitcoin Cash working as it's intended to work. Bitcoin using so much of its capacity, using 93% of its capacity on average, is not a good sign. That is not good for scaling. What the hell are the people who write these articles thinking? I'm just utterly confused by this article, and I do think that Bitcoin Cash in many major ways failed, because if it wanted to provide a superior alternative for Bitcoin, that would make Bitcoin, in this case then Bitcoin Cash, actually adoption ready. They didn't go nearly far enough with the technological upgrades. It is not nearly up to the level of some more modern cryptocurrency projects. I keep saying products when I mean projects every single time. But that is how I think about cryptocurrencies. I think it makes sense to apply business language and business systems. But it did not provide a superior... It is technologically superior to Bitcoin. There is no argument to be made about that. But it didn't provide a superior alternative that is so much more appealing that it managed to in any way kill Bitcoin or gain mainstream acceptance. And it, quite simply, it is superior technologically to Bitcoin, but it is still inferior to almost every single other major cryptocurrency. So it doesn't have the special place in the crypto world of being the first, of being Bitcoin. And it also doesn't have the technical levels, the functions of many superior cryptocurrencies. So it's kind of a nothing coin that you don't have a reason to really invest in. There's no reason to work with it, there's no reason to integrate it, there's no reason to invest in it. And in that way, it did fail. But you know why it did not fail? Because its blocks aren't full. That is just such a dishonest argument, created entirely to prey on people who don't know better, to misguide. You can make very many valid arguments for why Bitcoin Cash didn't go far enough, for why it did not achieve what it set out to achieve, for why it has very little reason to exist. This is not the correct argument to make, and I'm very disappointed in this article. Let's talk doom and gloom for a moment. Even though he actually has a positive overall message, Brian Kelly, who is of course one of the biggest voices in the analyst game, says there is no chance of a Bitcoin ETF in 2019. I don't agree, but let's read his statements because I do think he is a respectable analyst. Crypto entrepreneur and regular contributor to CNBC Brian Kelly claimed that there is no chance for Bitcoin exchange-traded fund approval in 2019. Kelly made his remarks in an interview with Cointelegraph at the Crypto Finance Conference, Switzerland, and on January 18th. Discussing the overall state of the cryptocurrency market, Kelly predicted that 2019 will turn out better than 2018. The analyst argued that we are somewhere close to the end of the bear market, but we might have another dip lower. It wouldn't surprise me at all. Speaking specifically about what we should expect from 2019, he continued. Probably the focus will be on currencies, Bitcoin, Litecoin, some of those, because we have quite a bit of geopolitical tension in the world. We are starting to see some global macro players use Bitcoin as alternative to their gold position. Citation needed, or as a way to hedge against fiat currency fluctuations and volatility. Once again, citation needed. According to Kelly, 2019 will see Bitcoin become a more accepted asset among mainstream investors. However, when asked about the likelihood of a Bitcoin ETF receiving governmental approval this year, Kelly said that there's no shot for that. The approval of a Bitcoin ETF, an investment fund that would track the value of its underlying asset and trade on stock exchanges, by the United States Securities and Exchange Commission is a highly anticipated event that is seen by many as a prerequisite for major institutional investors entering the crypto market. Over 2018, the SEC has received multiple ETF applications from various players, such as the Winklevoss twins, but is yet to approve any of them. Expanding on his point of view, Kelly said that the agency is unlikely to change its opinion in the near future, as there is too much that is unresolved. According to the analyst, it will take more than a year to settle the existing issues. This is the crux of where I disagree, because they agreed to reconsider their decisions on certain proposals, to look at them again. And I don't think you would do that if you thought there were such major hurdles in the way that you couldn't possibly do it without the time frame, that you couldn't possibly come to a different opinion there. The fact that they are looking at these again, that they are spending time, effort, money on looking at these again, means that there is a chance, even if only a small one, that they might change the rejection, that they might approve them in the future. Kelly further predicted that in the upcoming years the world will face a new recession, followed by a new financial crisis. Well, this is going to happen at some point. However, the nature of the latter will be different from the previous crises, which will purportedly create a window of opportunity for cryptocurrencies and result in making them an actual alternative to fiat money. And yeah, I mostly agree with his stances here, but the statement on an ETF definitely not getting approved in 2019, I do think that the chances of a rejection are higher than those of an approval for any one situation here. Simply because we have precedent from the SEC, and these are mostly the same people looking at similar projects and deciding if they should decide differently from before. It takes something to change their mind. They will not just randomly change their mind. I think he's sweeping a bit too much when he says there's no shot for that at all, however. But when we're talking about the rest of this, I do think he might be on track here. While I don't think we are quite... I don't think we can clearly tell that global macro players are using Bitcoin as an alternative to gold or to hedge against fiat currencies. Especially if we're talking nations, we have very little proof of that. Banks and financial institutions are slowly but surely starting to get into it, but not to the point where I think we see it as a means of taking care of geopolitical tensions. But I do think 2019 is looking to be much more exciting and much more positive than 2018. Of course, starting with the fact that we are not beginning the year with a massive, massive crash from an all-time high. But I just don't know where he is taking such a definitive statement about this impossibility of an ETF approval, and it just seems like something I've noticed with Kelly, and I do respect the guy, but I've noticed he always seems to go for an extreme. He never really goes for a middle ground position on anything, and I think that can be distracting. I think that can be a bit distracting. Last but not least, Overstock's T0 is finally launching next week. Overstock.com's long-awaited T0 security token trading platform will go live by the end of next week, CEO Patrick Byrne said on Friday. Byrne told CoinDesk the company is ready to hit the button and go live today, but was waiting a few more days to process user signups. But by the end of the next week, we will be turning the trading system live, he said, adding, "It's a big moment for us, 4 years in the making." The announcement means T0 will meet the timetable given last month by Jonathan Johnson, president of Medici Ventures, or Medici? There are so many ways you could possibly read that, Overstock's venture fund and T0's direct parent company. Speaking to CoinDesk in December, he said the company would go live in January. The company has already notified investors in T0's token sale, which concluded last August, that they can gain access to their tokens. According to a letter to investors, the 3-month lockup period for the tokens has ended, and investors could either create a brokerage account with broker-dealer and T0 partner Dinosaur Financial Group, or put the tokens in a personal wallet. Some people said, okay, they let people open wallets, but who knows when they turn the trading system on. I wouldn't do that if I wasn't sure that the technology was ready to go live, Byrne said. So T0, we have known about for a while now. Like it says, the token sale was already last August. This is long awaited because it's once again connected to a big name, to Overstock.com, who have of course been one of the early institutional big crypto supporters. This platform of course will once again provide a lot of access to a lot of security tokens to a lot of people who previously did not have the access or who did not trust the places where they could purchase these. So this once again should be a step that brings a lot more institutional money, a lot more big money into the crypto space over time. Once again, something where we won't see an immediate effect on the markets, but that will help build the case for the next bull run. And with that, I am ending this video. Thank you as always for watching. As always, all links in the description, as well as links to my social media pages and ways to support the channel. If you enjoy my daily videos, if you feel they bring value to your life, I would really appreciate if you could leave a like, leave a comment, and maybe occasionally share these videos with your friends who also enjoy crypto, who are also interested. I will be back with another video with you guys tomorrow.